All right, welcome. Thanks so much for having us. We have an incredible panel today. I want to get started with a question. The largest treasuries in the world are Berkshire Hathaway, which has $340 billion, Apple, which has $130 billion, Google, $95 billion. If you were talking to the CFO of those treasuries, who's managing those assets, what are the reasons you would give them for why they should put that capital on chain? Let's start with Ray.
Cheaper. Yeah, as simple as that.
Should I go? Well, many reasons. I guess we all know what blockchain could do, and less friction, easy access, cheaper, everything else, and available 24/7. But I mean, inherently, if asset on chain, all the crypto assets at the moment generate higher yield than most of traditional finance instruments. Right? I think that's already recognized by a lot of companies. But in the past, it's very easy to get access to this, but over time, it become easier. Right? So higher yield for crypto.
So how much higher are we talking? So you can get what? 4% from treasuries. What would you tell them they could get by putting those assets on chain?
I think, for example, like obviously I'm a chairman of Solana company. If you buy Solana, keep it there right now. Doing nothing, you get staking yield of 78%. And obviously, with a lot of instruments on chain and on relatively low risk basis, you get crossover 10% quite easily. But in traditional world, to get over 10%, it must be high risk, high yield.
Franklin, what would you say to our collection of CFOs?
Yeah, well, before Pantera, I was at JP Morgan for most of my career, and actually did get to spend a lot of time with corporate CFOs talking about blockchain. And when you break down what a CFO actually does, it makes so much sense for them to be thinking about having a digital asset treasury, right? I mean, they have to manage payments in and out of the company, they have to hedge FX risk, and they have to manage the working capital and also interact with public market investors, right? So if you break down each of those things, well, payments and FX risk, the answer to that has been pretty obvious over the past year or so. Stablecoins have been just proving themselves out to be the ideal payment rail for global cross-border payments. When you talk about FX risk and the fact that currency debasement is happening across almost every major market in the world, Bitcoin actually is the perfect answer to that. And then when you talk about working capital and the fact that for companies to actually start innovating and building on blockchains, well, you actually need to own some tokens to run transactions on the network. So your treasury should have tokens as working capital, because literally your business needs it to start learning and experimenting and using blockchains. And then finally, with investor relations. Well, over the past 12 months, there have been 4 or 5 IPOs of crypto companies, and then even a greater number of those in digital asset treasuries, and public markets have been massively receptive to that, right? So a CFO should really have this at the top of their priority list, because it just speaks to every single part of their job.
And Chao, maybe you can take the question a step further and tell these CFOs what percentage of their treasury they should put on chain.
Thanks. I think for the 3 players, the reasons for them to get into blockchain and crypto are different. For Berkshire, they're more like an allocator. According to our research, and this is consensus among the industry, no less than 5% should be allocated in the digital space if they're allocating for the longer term. For Apple, I think it's mostly the use case. Many of their users are younger generation, and they need a stable coin for payment, and there are other use cases for Apple as well. For Facebook or Google, it's their new growth engine for their business. Their users are very young. They are naturally tend to be crypto or blockchain native. If they want to retain or grow their business for the long term, they have to get into blockchain and crypto.
So if you're a CFO managing one of these largest treasuries in the world, and you listen to what Ray and Joseph and Franklin and Chao just said, it seems like a no-brainer to put at least 5% on chain, but they haven't. Why haven't they?
I wouldn't say they're pussy, but I can't say that. Yeah, scratch that. But I think it's just because when you have a lot of like shareholders, I think it's hard because if everyone understands this, then this is not an obvious opportunity. Right? So I think for them, they work for the company, right? They are not working. But if you ask, I bet that if you ask them personally, they probably would have bought like some cryptos already. Yeah. So, but I think when you work for other people's, managing other people's money, then you look at what your customers want, right? If I invested in this, whether it will make our stock price pumps or dumps, right? I think that's their main concern. But I think our panel is so serious. If Amanda asked me that questions, I would just say 69% just for the culture, right? That's it, right? And then just do it. Yeah. I think I'm not likey, right? But like, just do it. I think give it a try. I think that sends a very interesting message to the market. Yeah.
So why haven't they? What are the obstacles in the way of more treasuries coming on chain right now? Why are these guys delaying?
I think this year is sort of, end of last year and beginning of this year is really the period where I think crypto is sort of becoming more acceptable to mainstream, companies and everyone
Which is
else.
a vibe, right? Which is a vibe.
Right. And, I heard what Ray said. I mean, I'm glad that our panel is more fun than the previous one. And I guess, and then, you have to be a bit like understanding when it comes to the CFOs of all these major companies. They're not exactly born in the same era. It takes them a while, and then they probably, you want to watch. The more people do it, the more likely they would do it, the higher percentage would do it. It'll take some time, right? I think they will move towards the right direction, I think.
What do you think the big unlocks are? What changes things?
I think it's two things, and they're already starting to change, right? I mean, at the micro level, you talked about the individual CFOs, career risk, right? No one wants to risk their career on a decision and be a pioneer, but that's changing. Because now I think the biggest career risk actually is to ignore it. Because soon, every conference call that you have, every quarterly earnings call that you have, one of your investors will ask you, what is your strategy on this, right? And so I think it's only been recently that a lot of the regulatory headwinds have really started to clear, and now the career risk is going the other way around. The other thing that's changed is on the macro level where, you've now had major IPOs of companies that are building on chain. And, some of them are now part of the S&P 500. So when you follow the financial supply chain, every single hedge fund who's invested into the public markets will say, this is the new benchmark, right? How are you competing to basically benchmark your performance against these companies that are building at the edge of innovation and building the next new payment rail? And so, just to be able to meet that new benchmark is now a totally different conversation. Before, it was just this little pocket of innovation. Now, it's the standard.
So we need someone to get very publicly fired for not putting 5% of their treasury in crypto. Okay, we can put that on the wish list. Chow, what else needs to happen in order to get these treasuries on chain?
Maybe let me share from the practice perspective. We've done a couple of institutional grade funds over the decade from 2018 until now. What we've seen that in the early years, like before 2018 or 19, when we talked to the allocators, the decision makers, their response was always, yeah, interesting, but how can we get in? Their major concern is regulatory and compliance. They have to face the CFO or the investment director have to face their law and legal and compliance team. As the regulator gets in and industry gets across multiple jurisdictions, we have more and more clearer regulatory frameworks, licensing schemes, product approvals, and then institutions, big players, they feel comfortable to get in a way, with the way and the product they feel comfortable with. So for the executives, they don't have to risk their career. Secondly, is the professional service providers, accounting, fund administrators, law firms. They are all the soft infrastructures. They have to be ready. And now I think it's the right time for institutions to get in the blockchain and crypto space in a compliant way.
So let's talk about compliance and regulation. If so much of the decision making of these CFOs comes down to your jurisdiction and regulatory environment, where's the easiest place to put your treasury on chain geographically? And where's Hong Kong? How does Hong Kong stack up? Is this somewhere that you can feel comfortable putting your treasury on chain if your company's domiciled here, if you're on the Hong Kong stock market? Let's start with you, Ray.
That's a good question. Yeah. We have MemeSearch is a listed company in Hong Kong, right? So we actually had that questions, right? Talking to the stock exchange, SFC. I think generally speaking, right, if you use your own treasury to put into it, I think it's totally fine. We actually bought some Solana as well, right? But at the same time, I think the regulators, they also have to be very mindful, right, with what the message is sending to the public as well. I'm a guy born and raised in Hong Kong. One thing that I learned about like Hong Kong people is if it's government's fault, it's government's fault. If it's not government's fault, it's still government's fault, right? So they have to be very careful with all these regulations because it's sending a strong message to the market, right? So I think in Hong Kong it's actually very easy, right? We bought Solana, we just have to open an account on a license exchange like HashKey, like OSL, right? Like other license exchange, and you can just buy it. It's very straightforward. I mean, of course, right now there's only a bucket of coins that you can buy, but I believe that there will be more and more.
Which are the coins you can buy?
I think Bitcoin, ETH, so some other like big coins, yeah, the bigger ones, yeah. I think again, it's very safe, right? To make not very safe, right? Crypto is not safe, but I would say that relatively safe, right? So hopefully it doesn't go to zero, and then yeah. But I think it's actually very easy these days, yeah.
Joseph, what do you think? Is Hong Kong a place where one can feel
this
comfortable?
Is fun. I'm going to be brutally honest as well. I love Hong Kong. I've been here 25, 26 years. I'm a Malaysian, but I live here with my whole family. Hong Kong spirit is great. It's always very commercial. I still remember, I'll tell you this story. I crossed the border from China to Hong Kong during COVID one time. And then, obviously, I'm not sure all of you know this, if you carry an electronic cigarette crossing the border, you get caught. That's a criminal act. Because, the substance is type 3 narcotic based on laws that set up like 30, 40 years ago, is already completely outdated. And then the custom officer in Hong Kong was like, I said, hey, my friend gave me this. I'm going to bring it to another friend. I didn't know this is a problem. Can I just throw it away? He said, well, if you could do that, then all the drug trafficker would throw the drugs away before in front of us, and he'd run away free. And he took me to a room with his colleagues. And then he took this thing out of the box, said, do you see this? It's empty. We don't know what's inside. Do you agree it's empty? And the colleague said, it is empty. They put it in a garbage can and let me walk. If this is China, I can tell you, I'll be taken to court, I will have a criminal record, all my license will be revoked. But Hong Kong people are very practical, very commercial, right? They care about things that matters. Things that don't matter, they give flexibility. That's why Hong Kong has always been the hub of connecting East and the West, the gateway to China, and the gateway to Asia, right? And I hope, Hong Kong will, with some regulators here, will continue to uplift this spirit, even though with a stronger influence from our, mother country, we have to keep the Hong Kong spirit alive. And Hong Kong is harder at the moment. I mean, the reason we thought about doing Solana, DAT in Hong Kong, the rules at the moment is making it very difficult. The business model we're pursuing can be done in the US, cannot be done here. Right, and I'm not sure it's a function of SFC or Hong Kong Stock Exchange or doing this at the moment, but at some point we got to allow this, right? That's what I'm calling for. And for all the companies that actually have the need to buy crypto as to use as a treasury management function, we should allow that as soon as possible. I mean, you have some restrictions, some control, but it should not be so difficult. That's what I would say.
I'm so glad that CEOs of companies with their treasuries on chain can safely rip their vape. Franklin, for you, since Pantera, you live in the States, when you advise companies on bringing their treasuries on chain, which jurisdictions do you recommend? How does Hong Kong stack up compared to the US?
Yeah, I'll give you one perspective on this, right? I mean, I'm no expert in Hong Kong regulation. I'm trying to catch up, right? And I appreciate help from anybody in the audience on that. But, when I was at JP Morgan, I would have to pitch blockchain to all these senior managing directors, heads of businesses, blah, blah, blah. And I remember there was one executive who got it. He got it right away. And the reason he got it was because he grew up and worked in Hong Kong. So during the time when Hong Kong actually was restored from British control and the Hong Kong dollar was restored, I think that almost changes your mindset of, okay, this is what a new formation of capital markets looks like, a new currency, and it is wild at the beginning, and there's massive volatility, but that can happen again. And it can actually be extremely powerful. So I think it's almost in the DNA, I think, of Hong Kong to really see that financial systems can transform massively. And that speaks to the talent that's available here and just the psychology of entrepreneurs that, we get to invest in as sort of VCs who focus on this space. So, that to me is almost the biggest driving force. Now, I'm absolutely positive that, with the regulatory framework here, that it's really laid the foundation for entrepreneurs here to actually see that and feel that. Folks like Ray, who I think can really start to stretch and do that, right? And I think that's absolutely the role of regulators in the most positive way. So, I think it's not just the we always sink into sort of the legalese of regulation, but at the end of the day, that's really what's happening on the ground, is people finally feel the freedom to go and explore this transformation and hopefully build a ton of value and a better system.
What do you think, Chow? Are people in Hong Kong free to explore that revolution in bringing capital on chain?
Definitely, sure. HashKey as a group, we operate globally. We adopt a approach called global operations and local compliance. So we work with the multiple regulators. We started from Hong Kong, and now we have business in Singapore, Japan, Europe, Middle East. Based on our experience, I was educated in Hong Kong. I lived in Hong Kong for a while before I relocated to Singapore. I applaud the regulators here in Hong Kong for being the first in the region to introduce a regulatory framework in as early as 2018, if my memory is correct. And then there was different versions of a Web3 support policies. No other regulators have done that before in a region. The most recent example is U.S. regulator. They've been very proactive in voicing their support. But practically, I think Hong Kong leads in regulation in the digital asset space. But also we have to bear in mind that Hong Kong is not competing within the territory, within Hong Kong. Hong Kong is competing with other jurisdictions, with other markets as well. So I hope we can all work together to keep up, or be always at the forefront of innovation.
And do you think it is at the forefront compared to a market like Singapore or Dubai?
It's a tough one. I have to say that each market is unique in its own way. Hong Kong, we run a regulated exchange here. I think Hong Kong is the best place to run a regulated exchange. Singapore is more a place for wealth management. If you are to do wealth management, Singapore is the natural choice. Dubai has their own uniqueness. I think now Dubai is trying to attract the ecosystem from investors to traders, to founders, to founders. They have to attract the crowds so you can have proper regulatory framework, and then the industry can involve with certain guardrails and risk management measures. Mm-hmm.
I think we can't just like single out like crypto or Web3 regulations. You also need to look at the addressable market, also the taxation, right, and also the living standard, also whether it's fun to live in Hong Kong, right. So if you check all the kind of like rank all the stuff, I think Hong Kong is among the top. I mean, we were just talking at this, below the stage that, hey, Hong Kong is actually fun, right? If you go to Lan Kwai Fong during Halloween, super fun. Right? I didn't go, but super fun. Yeah, I read on thread. Right? And then if we talk about taxation, Hong Kong is among one of the lowest. Right? And then if you talk about addressable market, right, you can easily reach Asia. You can also easily reach like Chinese mainland. Right? So I think those are the potential. We can't just, this is crypto law, this is good. But hey, you go there. But the local market is small, right? And why do you go there? I think that's. I think as a smart entrepreneur, you probably will rank everything, to make that decision.
100%, and I've made that decision myself for the last couple of years being here. So I want to talk about the companies that didn't put in 5%, didn't put in 69%, they put in 100%. And that's digital asset treasury companies that either were listed vehicles, like MicroStrategy in that vein, or that went and got listed in order to have a treasury that's all crypto. That's been massively popular lately. Is that a short-term trend, or are we going to see more and more of that as a vehicle for how people buy into crypto? You want to start, Ray, considering meme strategy?
Yep. We are not the best person to answer this, right? I think Solana company is actually better, but I will try. The way that we see like there's a term called like that, right? DEAT is like a digital asset treasury company. I think we are building something. We are also building our own DAT, but we see it more like a digital asset technology company. Right? How can you leverage blockchain, digital asset, right, in order to revolutionize or like transform the different business? I think that's something that what we want, right? We buy some Solana, right, because we actually need to build on Solana, right? But if you put everything into just like saving it there, I think that can also work, right, depending on your strategy. Because, I mean, it's almost like, okay, whether it makes sense to save money. I mean, it depends on what you do it for, right? If you save money and don't do anything, that's not a bad choice. It's not the best choice. But if you actually know how to do it, then it makes sense, right? So I don't think there's like a simple answer for that. But I would say that some company, they do it better than some other company, right? And some company, they actually really do it. Some company, they only mention it and then just to pump the stock price, right? So I think investors, the public, have to pick very carefully.
And Joseph, you're Hong Kong's Michael Saylor of Solana. Tell us, is this a short-term thing or is it permanent?
I think it's just a beginning. It's a new type of listed company. I think I'm talking about more, obviously there are different kind of DATs, including digital asset technology company. And you have a mixed bag of different companies holding treasury, calling them DAT, because they have partial exposure to whatever underlying they're buying, maybe a basket strategy. But for us, it's a pure play. Our goal, I think, that there are about maybe 50 of the DAT, 50 to 60 of DAT globally, that are pure play. They are targeting very, on one crypto, and then the whole strategy, at least in the short term and early stage of life cycle, is to raise as much capital at the lowest cost of capital, a high share price, and different kind of instruments, including low-cost debt, pref shares, CBs, debt warrants, and then you have to find many different ways to raise capital to buy these crypto when the prices are still low, right? And that hinges upon their faith in this crypto. And this whole DAT makes sense because, like I said, I mean, if you are Larry Fink or own a big asset management company, you don't want to have hundreds or thousands of your PMs to having to operate wallets and move things around and having the chance of making mistakes and having, hacking and sort of the kind of risks. And the easiest thing for a big fund management company is to press a button and buy the stock. And obviously the question is, why should you buy DAT versus ETF? Not all the funds. I think most of the funds probably have is restriction on like buying ETF. They are supposed to buy stocks. They're supposed to choose the management who's running these companies, right? And even for those who can actually buy ETF, if, for example, if your fund manager after 3 years and tell you that my best investment and biggest, most concentrated position for the last 3 years is to buy Solana ETF, you're like, I can buy the ETF myself. I don't need to pay you to do this, right? So I think for most of the money being managed are on the main street. And we're talking about the crypto sectors right now, 3-4 trillion, but you're talking about hundreds of trillions on the secondary market. And the best way to access it, to be honest, is DAT, right? And if you run it the way you should, this is more a Wall Street game. It's a listed company. You have the management that have the credibility, have the discipline, and build the right corporate governance and transparency of the company. Be very clear on the strategy, what you're supposed to be doing, and then you do it with the lowest cost and highest discipline possible. Once you get to Solana, you stake it. You don't wait. You stake it. You get rid of all the costs in between. Bring it all back to the shareholders, and DAT should be the best way for you for institutions on Wall Street, family offices, or everyone to accumulate exposure in this specific, highly performing crypto asset class.
What do you think, Franklin? Have you guys invested in any DATs?
I think we've invested in almost all of them. Yeah, I mean, we were really, I think, the pioneers for DATs. I mean, I still have the document, the internal document, where we had a list of what we were going to call this thing when we were working with DFDV, the DeFi Development Corporation, which was the first sort of experiment outside of MicroStrategy to start this kind of strategy. And we had stuff like cryptocurrency holding company and crypto treasury, and we finally landed on DATs, digital asset treasuries. And since then, obviously we've had the privilege of partnering with many of the top DATs, and especially with Solana Company and Summer Capital being our favorite one. And so, when I get the question of why should DATs exist, I actually point back to the 1970s, where you could have had the same question of, do I invest into crude oil or do I invest into ExxonMobil, right? And actually, if you had invested into ExxonMobil, you would have earned, I think the last I checked was 3,200x your money. If you had bought oil, yeah, maybe you would have ended up getting out at $100 a barrel, or maybe now $60 a barrel, right? But it just shows you that what you're really investing into is, number one, if you believe that the demand for digital assets, the demand for this resource will increase over time, then you absolutely want exposure to it. And second, if you believe that to be the case, then amazing companies that can build on top of this resource, compound it over time, and find ways to add value to it is an amazing way to actually get that exposure, right? And so, the challenge then is who's going to build ExxonMobil, right? There were a lot of oil companies back then. A lot of them failed. Boom, bust. They all just went bankrupt at the end of the day, right? So, it depends on finding the right management team who can do exactly what we're talking about, which is manage risk, manage capital the right way, and then really understand these ecosystems and the digital asset that they're invested in. The thing that I love about Solana Company is the word company, right? I mean, in these decentralized ecosystems and protocols, that's been missing, right? We have the foundation, we have the core development team that builds the technology, but a company that is for profit and commercial and is thinking about what's going to add value at the end of the day, that is the piece that I think every single protocol wants to have, right? So I think, 100 teams will try. Only 1 or 2 of them will end up succeeding, but the ones that do, I think, will sit in that seat of being the most effective and efficient compounder, and then really being one of the biggest sort of proponents for the ecosystem. So, I think 30 years, 40 years down the road, if Solana and Ethereum and Bitcoin are still playing a massive role, the company for each of these ecosystems is going to be a fantastic asset in your portfolio.
I love that oil comparison because I love the digital oil characterization of a lot of this. Helped write a paper called that. But cool. So, Chao, if you also agree that these DATs are going to be around a long time, what do you look for in a good DAT?
Sure. As we all know that this market cycle is fundamentally different from the previous cycles because this cycle is institution-driven compared to previously mostly the crypto native guys are driving the market. When institutions get in, they look at long-term. Their investment philosophy, their investment time horizon will be much longer. I personally think the 4-year cycle will be extended. When we are the first fund, a VC fund in Asia, to launch a DAT-focused fund in Asia. We invested in a Solana company and a few others. Our approach is to look at the market and see who are the good players, who are as reputable and as experienced as Joe, and who has the best practice, who can employ the most investment tools, who can play very well across multiple markets, who can raise more money, more legit money. Those are the criteria, similar to how we evaluate a company, a startup as well. I'm very confident in the space. I think the DAT strategy will continue for very long, probably as long as decades, because we see a bigger trend of online and offline asset convergence. From offline, from off-chain to on-chain is RWA. Trillions, hundreds of thousands of trillions of assets are being tokenized on-chain, while DAT is trying to bridge digital assets into the bigger pool of capital in capital markets.
Let's hit RWAs quickly, and you can even argue that stablecoins are a type of RWA, right? So Larry Fink from BlackRock has said that every asset is going to be tokenized. Do you agree with that, and when does it happen? Let's make this a lightning round. You want to start, Ray?
Everything can be on-chain, but does it mean that everything needs to be on-chain? I think that's a more important question. Yeah, but I believe that thinking about that like aggressive approach, I think is a good way. It's more like a thought-provoking way to think about it. Because by default, we think, oh, this can't be on-chain. Right? If we force ourselves to think that, okay, everything can be on-chain, then how can we put this on-chain? Right? For example, I mean, this is alpha, right? But basically, we are doing something related to Pokemon cards, right? At a company, I mean, we are called Meme Strategy. We do more interesting projects, right? So we want to tokenize Pokemon cards. Can it be on-chain? Probably, yes. Right? Should it be on-chain? I don't know. We want to try, right? But do we have fun in it? Yes. Probably. Will it work? Maybe. Right. So I think we do this. Right. By doing that, that's how you can kind of like become like innovative. Right. You can be like creative. Right. But all in all, I think that it's a good direction to think about that.
Who wants to grab it? Everything coming on chain.
I think eventually everything will be on chain because at the moment, obviously, it's still very early days. If you look at the pool of money on the chain side versus the off-chain in the traditional world, it's just like a giant plus a little peanut, right? Nothing. But you can see a trend. Like we talked about yield before, Treasury. I'm a good example. I mean, I'm like 50-plus-year-old, a traditional financial professional. But ever since I started investing in crypto, I have not taken $1 off the table. It's going in and in and in. Because I don't think I could manage to get a kind of yield and return I would with UBS, HSBC, with traditional financial product. And I'm not in dire need to spend that cash. Even if I want to spend it, I could spend it now. I could use credit card, a lot of things to spend my crypto. I think eventually the pool of asset on the crypto side becomes hundreds of trillions. And then, and then a lot of people will be, because of various reasons, you keep a big part of this asset on that side, and everything has to be tokenized to access that pool of money. like, things that as simple as what you need every day.
Before we wrap, everything on chain. Anything to add?
I have a framework that I use that I think actually explains everything that's happened with tokenization up till now, and also will explain how tokenization looks for the next 50 years. And it's called the law of financial physics. So what it says is every asset will eventually go to where it can flow most freely, trade most cheaply, and be valued most highly. It will be inevitable, right? But that isn't true in every single place in the same way, right? When you look at the US, it really doesn't matter that the US dollar can be tokenized, right? If I'm a US customer with access to US payment rails, tokenization doesn't do anything for me, right? So it doesn't trade more cheaply, it doesn't flow more freely. But for somebody in Latin America, it checks every single one of those boxes, right? And so, the way that I apply this helps predict where it's going to happen next, what asset class is going to tip next, right? And I think it's inevitable at the end of the day because, I think exactly to this panel's point, it becomes a black hole, right? The more that capital flows and liquidity flows towards it, the greater the gravitational pull of that particular market.
Chao, take us home.
Sure, we draw a line between digitalization and tokenization. Internet is for information, so if it's on internet, it's digitalization of information and data. We think blockchain is the internet of value. Everything that has a value, be it money or asset, should be on blockchain.
And that's a wrap. Thanks so much, guys. Thanks, everyone.
Thank you.
Thank you.